of IIFL, who tracks the technicals very closely, joins us now on the phone line. Anu, it's been chaotic this morning, but how are you approaching the index after the 3% crack that we've seen?
Well, the way we opened gap down today and the way the selling is, kind of continuing despite the levels being close to lows, we are looking like we're heading to the 54.70 around levels which you were talking about just now. Because the way we had a very mild pullback where it was indicating that it would try to pull to 58.20 to 58.50 got negated the way we opened up. Bank Nifty being almost nearly 5% down. I think 54.70 looks to be on the cards.
Anu, hi, morning. In terms of the Bank Nifty, what are the levels that you'd be watching out for?
Well, Bank Nifty, since it's traded on the futures more than on the cash side at 95.62 where you're seeing, there is no real support now to 9200. So another about 3% can go off in the next couple of days.
How do you see the run from here, Anu? Do you think that the volatility that we've seen in the last 10 days will resume itself, where we will continue to see very narrow dead cat bounces on the markets, which will immediately get sold off into? Or do you think that now that this 5500 level might go soon, it will be one swift downtick for the market?
See, the fact remains that the first couple of times you get these dead cat bounces where people try to buy for the small rise. But as the market breaks even more severe levels, which it would if it breaks the 55 levels, I don't think that buying will emerge, that people are more confident or they see market sustain for at least 4-5 sessions. So probably it will stay at a situation. I don't see a very big fall below 54.70. Probably if it's possible, if panic ensues, you can see another 50 to 70 points. But people would wait for the market to kind of come back to 55, 50. Maybe that would take, a dead market for about 10 days before you see any kind of buying interest emerge.
Anu, in terms of a couple of these stocks which have held up, HUL, ITC, and maybe a couple of these IT stocks such as Infosys and HCL Tech, what would your call be on the technicals of these?
Well, I mean, the only stocks which are really looking okay on the charts is probably IT. In that also, probably it would be TCS, which is seeing a correction today, so one needs to see where it stops. I think Tech Mahindra is looking to be one of the safest counters at this time. Would be even wary of ITC and HUL because profit taking can come there very swiftly any of the time.
Would you advise shorting anything in this market now, Anu, or do you think a lot of damage has already been done and it will be difficult to short individual stocks on the index?
Well, when the market is already 3% down, to go in would be pretty, you would be taking a risk which is pretty high. But given that there is a bounce intraday, or if one wants to be headstrong and, short the market with 5575, I think if market doesn't go up over 5625, you're probably looking at 5470. So you have a 100-point downside with a, say, a 50-point up. So 1:2 ratio for someone who wants to take the risk, then okay. But I would say it's already been a gap down and a 3% move down. Would wait for it to, give us at least a small move up.
Okay. Just one follow-up to that. If we do see this market crack below 5500, which is just 70 points away, which is the next leg of downside in terms of sectors now? Because, we've seen intense pressure come in on the banks. We've seen intense pressure come in on some of these infrastructure capital goods names. But from the frontliner heavyweights, which are the 3 or 4 stocks which could take the markets lower? Or do you think it will be a secular run?
Banking is definitely going to take it on the chin again because this is more of a rupee and interest rate kind of a related issue. So obviously even 92 can be, broken down further. So that is the first sector. And I think the other sector which is at complete risk is your consumption stories, which are highly valued. So that's the reason I'm saying your Hindustan Lever, your ITCs are definitely into risk. The third sector is your auto, which hasn't cracked too much in the last 10 days. So be it your M&M, be it your Bajaj Auto, that's the next round of stocks which are at risk.
Anu, what about oil and gas? I mean, how much of a part does Reliance play now in the next leg of the downfall that you're talking about, and maybe even ONGC?
Well, Reliance is being kind of showing support around those 845 levels. I think over the last one and a half month, this is one stock which is kind of shown there. Today it is below those levels. The next line of support is at about 795. Difficult to say whether it will break that, but I think relative outperformance in the last one and a half months has shown strength. ONGC obviously is weak. We had a basic rumor that, or rather news flash, that petrol and diesel prices may be hiked upwards, so we've seen some kind of bounce in those stocks. But if that doesn't materialize, yes, you will have a sharp cut again there.
Are there any contrarian buy calls that you would want to advise at this point, either in the frontliners or either in the broader markets?
The only stock, as I said, we're liking or we're finding some kind of not overvalued at the same time, probably can go up higher, is Tech Mahindra. But that too on dips. So maybe closer to, the 1270 levels. Sorry, I'm not getting the level right, but another 2% from here down, that markets can be volatile. But apart from that, if it's a value investment proposition, probably at lower levels, one can look at doing tranches for investment.
Okay. Anu, one stock which has been in focus all day because of multiple downgrades is Titan. It's currently at 241 rupees and is down 15% on a YTD basis, but had recovered earlier. It's been very volatile this entire year because of what we've seen from the government end. How would you be placed on the technicals of Titan?
I think I wouldn't be interested in buying this stock at all because of the legislation, it can fall down even to a 217 level. We've seen that happen before, so I think I would give this skip.
Okay, just a couple of more stocks, but before that, Anu, at every point when this market hits the 5500 level, there is a bounce that we see. So it has been sort of maintaining the level all throughout 2013. If we do see that bounce, would you advise traders against trading it on the upside? Because we've seen what happens every time this market moves up from that 5500 level, there's a swift and sharp correction immediately.
Yeah, because as I said, that 54.70, 54.80 is a strong support. Around that level, you do see buying emerge. Now, it depends on what news comes out. If the rupee is at, say, 62.63 and we are at 54.70 and we manage to hold those levels for a couple of sessions, then probably it makes sense. Probably the first time it touches and gives you a 50-point bounce wouldn't get buying effect. As I said, you would probably have buying interest come in here if the market stays dead at that level for some time.
And you would completely rule out any kind of positions being taken in the mid-cap index, right? I know the mid-cap space itself has been out of the radar for a while now, but would you completely rule out any kind of trading action there?
See, as for trading, it doesn't make sense to go in when, it's a falling knife. If you're an investor, you wait for the market to stabilize and then get into the market.
Okay, Anu, thanks very much for that. We leave it at that. It's